Good evening, everybody. Happy Monday. It's May the 30th. Long weekend for my American friends, families, and viewers. It is Memorial Day. I hope everybody had a wonderful Memorial Day down south. But there's a lot to talk about because last week's markets were incredible. But we need to see some very important things to get confidence that this market will continue to the upside. So let's get started. I'm your wealth guy. Let's talk money. Let's talk Monday night market preview. All right, everybody. So as usual, thank you very much for tuning into the channel. I really hope you like our video today. And if you do, please hit that like button, subscribe, share, but most importantly, comment. I really want to hear what you have to say and your thoughts on this market. But let's get started because last week we saw an incredible run up after we double bottomed on the market. Now, if you recall last week's video, I did say that that would be an important point, an important level of resistance. But one of the key elements that we saw was that the markets were being bought every time we dipped to these dangerously low levels. Now, even though the 10-year yield did drop, and it actually dropped quite a bit throughout the week, which would typically indicate that there's a lot of money going to safety, what this actually indicates to me is that there is probably, odds are, a very significant amount of institutional money coming in and buying up everything because of this discount. I mean, if you look at it, we were close to that 20% point in the U.S. markets and entering bear territory at one point. Now, we never actually did break bear territories with the S&P 500. And that's a very, very important point because every time we came close, the buyers came in, bought it, pushed it back to the upside. And then throughout the week, we continue to see buying momentum continue to push the markets higher and higher. And even right now, if we take a look at the S&P 500, or in this case, the future, so the US 500, it's up 178 points above 4,000. And remember, the low was 3850, just under that. That was the critical point. So we're up quite significantly, sitting here at 4178. Very significant move to the upside over the last week. But what does it mean for next week or this week? Well, it means that we need to see some very key elements fall into place or pieces of the puzzle fall into place in order to confirm some more upside trend. One of these is the 10-year yield. Ideally, at this point, we don't want to see the 10-year yield fall too much further, only because that indicates that there's still a little bit of buying bonds and safety rather than selling. Because if the bond prices start to go up, or the bond yield, I should say, start to go up, then you know that there's actual selling from the bond market or from the place of quote-unquote safety and security and moving back into the only other place, which is equities. Now, we did see a little bit of money moving out of safety, so moving out of the US dollar, which has come back quite significantly from its high. And all that money has also been moving back into equities, which helped prop up the market most of last week. Even today, the futures are actually pointing quite significantly to the upside, even though right now the US 30 is currently down about 33 points. The S&P 500 or the US 500, which is the broader scope of the market and actually the more important number than the Dow, is actually sitting pretty well flat even tonight. However, let's take a look at the rest of the market because today we did see some significant moves. If we take a look at the US dollar is currently sitting at 101 and 101 and a third. The 10-year yield is actually sitting at 2.815, which is a little bit higher than it was earlier today. And at the close of Friday, looking at cryptocurrencies, this is actually a great number to see because cryptos are now starting to move slightly outside their channel where they traded for about 30 and a half down to 29 or just under 29. We're now up 7.83% on Bitcoin over the last 24 hours, currently sitting at 31,742. And Ethereum is up a whopping 9.91% over the last 24 hours, bringing it right now to 2,000 even, which is great. This is a major number for Ethereum. Would love to see it push past this point. Now, if we continue to hold above this or at this higher level of the trend lines, this can actually be a very positive momentum for the upside for cryptocurrencies. Looking at commodities, gold and silver throughout the day were actually quite positive, and even all of last week we saw some nice gains, especially in gold. Silver pushing just under $22 again, which is a great sign. Gold currently down today 1.97, so not very much, pretty well flat on the day. Silver about 4 cents currently down. So again, a very positive sign for both precious metals. Looking at energy, however, crude, West Texas in particular, is up quite significantly, sitting at 117. Now that's a very big number, especially if we take a look at the rest of energy. Energy is also up quite a bit. Now, talking about these points, let's go back and focus on what we need to see this week. Number one, we need to see the 10-year yield either hold at these levels or slowly in a controlled fashion start to inch a little bit higher every day. We need to have it controlled. It can't go up 4 or 5%, 2-3 days in a row. That is not what we need to see. We need to see control and a slow progression to the upside, ideally getting to about that 3% yield mark. And another thing we need to see is we need to see crude continue to move up. As I've always mentioned, crude is the lifeblood of the market. If crude goes up, since it's the lifeblood of the military industrial complex, also heavily invested in by banks, if crude continues to go up, we will see the market follow suit, and we will see financials finally stepping in and starting to make a move back upwards after getting absolutely annihilated for the first part of this year. The other thing we need to see is that US dollar pull back just a little bit more. It'd be great if the US dollar can dip below $1. Even remember, this is the relative strength. So the currency versus other currencies, we know it's eroding anyways, regardless, due to inflation alone. But it would be great to see the US dollar or the Dixie drop a little bit further here. So those are the three things I'll be watching for. The 10-year yield, crude to continue to march upwards, and the US dollar dropping a little bit more. Again, all these will be a positive sign for the market, and that is what I'm looking for this week to get some additional confirmations that we might be moving to the upside here. But that's it, I think, for now, everybody. We do have some things going on the calendar which are actually quite significant. So tomorrow, for example, we do have consumer confidence, which is a very big number tomorrow. So let's keep an eye there. But I think for now, as we get into June and then we start talking about interest rates, once again, confirmation from Powell last week just confirming that interest rates are probably going to increase only by 0.5 basis point, which was very positive for the market. I think we're probably going to have a relatively positive market for the most part this week. But again, I will see you every morning at the opening bell.